Hey, what's up everybody? Welcome back to another episode of Weekly Roundup. My name is Frankie.
And I'm Ryan from The Coffee Break.
And as usual, thanks to The Coffee Break for bringing us all the juicy news every single week.
Subscribe to stay informed. And in fact, we've got a big news for you guys. Stand a chance to win 1,000 ringgit when you subscribe to The Coffee Break with the code below from now until the 30th of April. Remember to subscribe and stand a chance to win.
This podcast is also available on Spotify, so do check us out on the Weekly Roundup by the FAQ Show. Okay, so last week was quite a disaster for this part of the world. There was a very bad earthquake that happened in Taiwan. It was one of the worst in 25 years, killing at least 9 people at the time of recording this podcast today.
I mean, the earthquake was so big that it actually triggered initial tsunami warnings in Japan and also the Philippines. As usual with all these earthquakes, usually there are ripple effects.
I mean, if you look at the news, people are talking about the buildings collapsing, there are power outages, landslides and things like that. But we want to focus more on the business side of things.
Yep.
And when we talk about Taiwan, the most important thing in Taiwan for the world in the business sense is actually TSMC. TSMC is one of the largest semiconductor chip manufacturer in the world. They make chips for companies like Apple, like Nvidia and stuff like that. So when earthquake happened in Taiwan, the first reaction that comes to investors is TSMC okay or not? Is the chip going to have another round of shortages? Stuff like that comes to mind. And that created a little bit of panic in the stock market when the earthquake happened.
Yeah, because back in 2016, I think when the 6.6 magnitude earthquake shook TSMC's Tainan fabrication plants, following the disaster, the company actually assured the people assured the businesses, business investors around the world that shipment would not be impacted by more than 1%.
Yeah, in terms of shipments, it did drop around that quantum, about 1.8%. But the revenue for that quarter went down by 8.3%. So that's actually quite a big amount. So with that history in place, people are worried that this time around, not sure the history is going to repeat itself.
Yeah, because the magnitude is even bigger, right?
It's also because of that 2016 earthquake, right? I think TSMC started to become more serious about preparing for this kind of natural disaster. So they started to revise their protocol and infrastructure to make their buildings stronger so that if in the future this kind of natural disaster happen, then they may not be impacted that much lah. So that is a blessing in disguise. Today, when that 7.2 magnitude earthquake happened in Taiwan, again, they are saying that they are not so badly affected. This time around, they reported that it's just minimal damage. So a small number of tools got damaged and stuff like that. And they are still doing inspection at the time of recording of this podcast to assess the full damages of their factory. But nonetheless, they have stopped everyone from working. They have evacuated the people and staff. Luckily, nobody got injured in terms of their employees and all that lah. So since the earthquake happened, 10 hours later, their fabrication plant has recovered 70% of the tools. And the critical items, the critical machineries, they are all not affected. When I say critical machines, right, these machines, one machine can be like multi-million dollars kind of machine. So luckily, those stuff are okay.
Do you think there'll be any impact to Malaysia as a result from, being one of the world's biggest semiconductor players?
Okay, Malaysia is one of the testing hub for all these chip manufacturers, right? But the good thing is that a lot of Malaysian tech companies, they have enough of inventory. So they've already bought enough all these raw materials from TSMC in the past. And it should be able to last them for the next 2 weeks. So the president of the Malaysian Semiconductor Industry Association said that, things is going to be fine. However, he did warn that if this prolonged suspension exceeding more than 2 weeks, it could potentially bring significant impact to the semiconductor market as a whole. When he said that, it's not just to Malaysia only, it will affect the world. Simply because Malaysia is one of the most important semiconductor supply chain for the industry.
There have also been reports, I think in the past couple of weeks, saying that, Malaysia is emerging as a hotspot for semiconductor factories as the US and China tensions prompt companies to then diversify their operations, right? So Kendrick Chan, the head of Digital International Relations Project at LSC Ideas, said that Malaysia has a well-established infrastructure with around 5 decades experience in the back end of the semiconductor manufacturing process, right? So particularly in assembly, testing and packaging. And this is very telltale, right? Like you look at all the investments from chip companies in the past few years. We look at Intel in 2021 December said they would invest more than 7 billion to build a chip packaging and testing factory in Malaysia, with the production expected to begin this year, 2024. Another US chip giant, Global Foundries, last September opened a hub in Penang to support global manufacturing operations alongside with its plants in Singapore, the US and Europe. And it just goes to show that it is a big player in the supply chain, right? Because based on a report by the Malaysian Investment Development Authority, Malaysia holds 13% of global market for chip packaging, assembly and testing services. 13%, right, from our small country.
But personally, I don't think investors need to worry too much about the earthquake in Taiwan because TSMC is very well prepared this time round. So I don't think it's going to be like 2016 where 8.3% of their revenue is affected. And in fact, Taiwan as a country itself, they are so well prepared with all these kind of natural disaster. While 300,000 households lost power after the earthquake, 70% has already recovered in terms of their electricity by 9:30 in the morning on that day itself.
Yeah, I think the earthquake happened quite early in the
morning, correct. But just now you mentioned about Intel diversifying some of their facilities in Malaysia. That is one good way to diversify some of the risks. So all these geographical risks and all that. So like, for example, Taiwan is prone to earthquake, Japan as well. And then if you have plants in places like China, then China and US is not in
so
a very good relationship. You know, all this kind of stuff. So all these MNCs is better to diversify their facilities. So that's one good move by Intel. But I'm not sure the next move that they made is that good because, like I mentioned just now, China and US, they are not in a good relationship. And because of that, US has been encouraging their companies to onshore their production back in the US. And one of the most important thing is obviously the chip, right? If you control the chip, you control the technology. That's what the US wants. So they have been giving out grants to companies to onshore the production. And Intel took that grant, $20 billion worth of grant from the US, and they built their own foundry business back in the US. Now, Intel in the past, they are just a design house, just like Nvidia, just like Apple. And then they will outsource the foundry production outside to TSMC and things like that. But because of this initiative, now they have started their own foundry manufacturing in the US. But because they are not in this business, right, it becomes very inefficient for them to operate their own factory. And for the first time, because of this new plant, so in their financial report, they have released their revenue to report the foundry business and also their bread and butter business. And the foundry business, which is the manufacturing part, has suffered a $7 billion loss in 2023. That is a huge loss for Intel. So whether you want to be patriotic or you want to protect your P&L, it's very hard to have a balance over there, right?
One thing is because it also secured nearly 20 billion of
so in a way the government subsidized them.
Right?
They probably did some projection and say that in the first few years I'm probably going to make some losses, right? It happens to all new businesses. So maybe this is just a gestation period. Hopefully 2-3 years down the road, they're able to break even. There's a high chance for them to do that because this plant, this foundry business, is not just to produce their own chips. It's also for other companies to outsource the chip manufacturing to Intel. So the potential is actually quite big. Hopefully, going forward in the future, this foundry business of Intel is going to pick up very, very soon.
Yeah, but there was also a reason why, other countries were selected as the home base for all these chip design companies, right? Because it's probably too expensive to manufacture in the US.
Yes, correct.
Right? There's labor costs. There's unions are very strong in the US, right?
Exactly.
Your infrastructure cost is probably more expensive as well.
Exactly. So I think chips that are made in the US in the future is not going to be cheaper.
It isn't. And I think also the fact that Intel has also lost its strengths over the years, right? With Nvidia coming in, with Apple making its own silicon chips, right?
Okay, so if the chips is not going to be cheap in the future, chips not going to be cheap, that means inflation, right? Inflation keeps going up. And I think while all these central bankers, they are trying to calm inflation by adjusting the interest rate, but I think the world is slapping itself in the face, to put it bluntly.
In what sense?
Well, on one hand, they are trying to keep inflation low by keeping the interest rate high. But on the other hand, you have all this geopolitical tension. You have all this like onshoring, even though the cost of production will be higher. All these things are causing inflation, right? Just to give you two examples, right? Just last week, because now Ukraine and Russia, they're having this war, right? Ukrainians suddenly launched an attack, a drone strike on a Russian oil refinery. And we all know that Russia is a very important oil producing country. And the oil refinery that Ukrainian attack produces about 155,000 barrels a day.
A day.
A day.
Wow.
So to give you in context, how much is 155,000 barrels? The whole world produces 20 million barrels a day. So 155,000 is close to 0.8% of the world's production. You may still think that 0.8% is very little, Nima. But
It accumulates.
it accumulates, that's number one. Number two is, if Ukrainian is starting to attack Russian refineries, what makes you think that they will stop at just one? Maybe they'll attack the second one, the third one, the fourth one. So that expectation has created fear in the market, and that's why everyone like, whoa, let's quickly buy up oil now. And that's one of the reasons oil price is going up recently. And when oil price is up, it's gonna bring up inflation.
Yeah, it's going to have a ripple effect lah.
Yeah.
It's going to have a domino effect on its own, right? Because your first thing, like logistics, need oil.
Everything needs oil.
Everything lah, right?
Everything
Your
needs oil.
petrochemical products need oil.
Yeah, so if that is not worse enough, right? In the Middle East, we also know that in the Middle East is
There
not
is
a
also
very
another
stable
conflict,
region.
There's a big
There's
conflict
another
there,
conflict over there. So we all know Israel and Palestine, they are fighting.
Yep.
But recently there's a surprise attack on the Iranian consulate building in Syria. And they are blaming the Israelis for the attack. And then suddenly you realize, right, when two countries are fighting, you suddenly have a new party inside this conflict as well. And the bad thing here is that Iran is also one of the major oil producer. So one, Russia is being attacked. Now Iran is also saying that they want to retaliate from this bombing. So I don't know, man. I think oil price may hit $100 per barrel very soon.
Ooh.
I mean, I'm just speculating, but that's not Mission Impossible, right?
It is going to be the case lah. I think the Middle East conflict is not going to end anytime soon. Despite, I think, pressure from UN, pressure from US, it doesn't seem like it's going to tame down, right? And Russia and Ukraine war has also been ongoing since 2021, if I recall. So it's almost going to be 3 years.
Yeah, so all this issue one side, right? The mother nature is also not helping. With climate change, the weather is very unpredictable and all that. Commodity prices, other crops are also increasing prices.
Which one? Sugar?
Cocoa in specific.
Oh.
So cocoa in 2024 alone, the price has gone up by 130%. 100, there's more than double.
That's better than Bitcoin.
Better.
That's better than Bitcoin.
Correct. So all these futures traders who are trading all these commodities, I think they're making good money. But of course, you have to take the right position. If you short cocoa, then I'm so sorry.
Then you're screwed.
You're screwed, correct.
What is driving this? Is it because of demand? Of course, there's that climate change that is impacting the supply. But what is actually really driving? Is it because of domestic consumption or?
No, according to what I read, is pretty much because of weather condition, particularly in key cocoa producing areas like the West Africa. But of course, there are other countries that produce cocoa, right? Places like Brazil or Ecuador. But it's not as big as West Africa. So yes, you may argue that then all these countries, they can come and fill the gap, right? But crops, they
need time to grow lah.
Yeah, they need time to grow. You need time to plant new crops and all that. So it will take years before the production starts to kick in. So during this period of time, I think it is going to be a very difficult time period for commodities. Now, all these countries, they see this opportunity, they will start planting cocoa, right?
Yeah.
What if 2-3 years down the road, West Africa's weather conditions sort of normalize, then production starts to improve, but you have excess of planting in Brazil and Ecuador to fill this gap in the past. Would it actually create oversupply issue going forward? That's also another question to consider.
It's kind of like the situation with gloves lah.
Yeah, exactly.
Right? So with pandemic 2021, Malaysia was one of the biggest. I think it's still one of the biggest. Malaysia is still one of the biggest glove manufacturers in the world.
Yeah.
But the market share is going down. I don't think it's hard to create a manufacturing plant for gloves.
It's not hard to build a glove manufacturing plant. The hard part is to get the FDA approval to say that your
This
glove
can be
is
used.
safe to be used in hospitals and stuff like that. But we have already gone through the pandemic, I think 3 years already.
Yep.
I think any kind of approval has already been done.
Yeah, I know China is now like a big manufacturing hub for gloves as well, right? And that just took them 3 years.
But having said that, for now, because cocoa prices is up so high, right? In Indonesia, the government expects cocoa price to go up very significantly, and very soon it's going to affect their domestic F&B producers, the food and beverage producers.
So our chocolate's gonna be more expensive.
Oh yeah, man.
Uh,
Your chocolate drink, your chocolate bars, everything is going to be more expensive. This is what the Indonesia expects. But I suppose many governments in the world will also expect the same as
so
well.
it's not because of Easter lah, because Easter was last weekend, right?
Not because of Easter, man. Now, for Malaysia, not sure whether it's a good thing because Malaysia is the 4th largest cocoa grinding country in the world.
Oh, so Malaysia, a lot of things also quite good, huh?
Actually, we are very powerful.
Chips, you are quite good.
Chips also
right?
quite good.
Cocoa also quite good.
Palm oil also quite good.
Glove also quite good.
Yeah.
But salary not so good.
Oh yeah.
Inflation not so good. Anyway.
Yeah, so with the cocoa prices going up so fast, I think it's going to do well for Malaysia. Especially for this cocoa grinding company called Grandchong Berhad. But my suspicion is that it's only going to be good in the short term.
Why?
Now, in the short term, prices go up, they can sell at a higher price. If they hedge their cocoa prices in the past, it's even better. You get double
because
earnings
they
from that.
already have locked in their price. So
They're
hedging here means locking the price of your goods.
But if prices become so high that your chocolate bar, your chocolate drink becomes so expensive, eventually people will just say, maybe I cut down on chocolate. Don't eat so much chocolate and all that. So demand will come down. When demand comes down, all these factories, they don't need to produce more chocolate already, right? They will need less grinding capacity. Then Guanchong Berhad is going to suffer. Yeah, that's a long-term implication. So hopefully cocoa prices can normalize a little bit, don't go so high. Because anything that goes high in a very short period of time is never good in the far future.
What goes up must come down now.
What goes
right?
up must come down.
I think that's all we have for the news today, Frankie. And
That's
if you
all.
like chocolate, better maybe stock up some.
Stock up
some more. Lah.
Yeah, but the thing is you can't really keep it for very long also. But hopefully by the time you finish all your stock, then the prices come down already.
Thanks for tuning in. Thanks for tuning in to the weekly roundup show. We are very happy to be here.
Yeah, just to mention again, don't forget to subscribe to the Coffee Break because from now until 30th of April, we will pick one lucky winner to win 1,000 ringgit cold hard cash.
Stand a chance to win money, man.
Yeah, so sign up from the link in the description below.